Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today I have decided to replace the gold research by the view of taking a look at the Canadian dollar, because on the gold market right now it's really difficult to say something really new. Market stands approximately in the same area and the same levels that we have talked about yesterday. No patterns have been formed there, so I think that gold needs just a bit more time to show something. That's why today we will take a look at another currency. In addition to the euro currency, is the Canadian dollar, because the Canadian dollar is really hot and tough situation, since you know probably about the OPEC agreement and what's going on the shale extraction, shale oil, in the United States boom again. So I just will remind you overall idea that we have here and that we have talked about within the recent couple of weeks. So initially, when the market stands at 136, and that was right before the OPEC meeting, we said that really very high probability that they will not come to agreement, because they already have met many times, but no agreement have been achieved. And we said that probably this could become the case in the current session again. But they still have come to agreement to contract the oil extraction, and Russia has joined to this agreement. As a result, we see some rally on the crude oil markets has moved above the $52 per barrel, and everything looks fine. But currently, it seems that this will become the long play journey. Yes, the first event that we thought about and we have created trading plan for this event hasn't happened, but it seems that it's not yet the end of the story, guys, because as a result of this oil extraction freezing, the price of the crude oil is starting to rise, and that has led to the shale oil producers in the United States to increase the extraction. And that has become profitable again. And it seems that the room that has been released by the freezing of the oil extraction by the OPEC countries right now is starting to flow by the shale oil that's starting to extract in the United States. And the overall impact of the market could be really miserable. And it really could lead to stopping of the price rising on the crude oil, and this reaction could become really short term. This reaction, I mean, on OPEC agreement. That's why the analysis of the Canadian dollar from the perspective of this situation looks very interesting and important. Yes, the first event hasn't happened. I mean, the failure of the agreement between OPEC countries. But at the same time, right now is a really big question. What really durability will have this agreement on the market? So, and it seems that it's not really the fact that this will lead to significant price rising. I mean on the crude oil. It could become really short term as the extraction of the shale oil in the United States are booming again. You probably know about the backwardation situation on the futures of the crude oil with the delivery in 2018, because the shale oil producers are rushing to protect their profits and taking the contracts on the delivery on the crude oil on 2018 and the current levels. So it's really a very tricky situation, guys. That's why currently, guys, we see the pullback from the hour 136 area. This is a result of the OPEC meeting, an agreement to contract the extraction of the oil, to freeze the extraction, this drop. But right now, as you can see, Canadian dollar stands at very strong support. This natural support area, fib level of 132.70 area, and take a look. That is the monthly pivot support one. So that's strong support. As a result, we expect to see some bounce on the intraday chart here to the upside because the strength of the support is sufficient to hold market for a while and to show some minor retracement here. This could lead to appearing of the large reversal pattern on the 4-hour time frame chart. As you can see on the 4-hour time frame chart, this will be and could be the head and shoulders pattern. So that was the left shoulder when we started to trade the Canadian dollar 2 weeks ago and said this probably should reach 136 because here was the major target. First, we thought that this will be godless triple to buy. I just remind you how the steps of our trading and our view on Canadian dollar. First, we thought that this will be just godless triple to buy, and indeed, first reaction was really positive. But late market has returned back to the downward action as soon as OPEC has come to agreement. And you can see right now, market has hit 1618 extension of this A, B, C top pattern. So it means that we have not just the fib level here, but agreement, because this area is not just the ABCD target. This daily fib support is 132.72. So here we have the agreement support. As a result, since this really strong support, we expect that market could show some upward bounce here. And to keep the harmony of this head and shoulders pattern, that retracement probably should be somewhere to an area around 134, 134.50 area. After that, depending on what will happen in this top, it will be clear what to expect further. Because guys, currently, I think that it's not done yet with the possible breakout of the 136 area. Because if the crude oil will fail to continue upward action and will turn down again and return back below the 50 level, $50 per barrel, this could lead to the failure of the head and shoulders and another attempt to challenge 136 area. So that it will mean that this 3.8 retracement is just reaction on the butterfly completion, on the strong resistance completion. As soon as this reaction will finish, market could try to break it up, especially if the crude oil price will start to drop again based on the boom of the extraction of the shale oil producers in the United States. So as you can see, the situation is really interesting right now around Canadian dollar. But this is mostly, guys, medium-term perspective. In the short-term perspective, as market stands at the support, let's keep an eye on this retracement. And probably should happen to an area, as I said, 134, 134.50 to keep the harmony of this pattern.